BlackRock CEO Larry Fink, who manages the world's largest money, has expressed concerns that smaller banks may be at risk of facing similar problems to Silicon Valley Bank. Here are three major reasons why Larry Fink believes that smaller regional banks are at risk of failing. 1. Increasing interest rates. When interest rates go up, it becomes harder for people to pay back the money they borrowed from the bank. This means that banks may not be able to pay their own bills and could eventually go bankrupt. During the 1980s and early 1990s, over 1,000 institutions failed due to this issue. 2. Liquidity mismatches. Years of lower interest rates have driven some asset owners to invest in illiquid assets. This means that they are trading lower liquidity for higher returns. However, there is a risk that these asset owners could face a liquidity mismatch, especially if they have leveraged portfolios. This could cause them to default on their loans, leading to a domino effect in the banking sector. 3. Inflation. The U.S. has experienced high levels of inflation not seen since the 1980s. This is partly due to aggressive fiscal and monetary policy since the 2008 financial crisis. To combat inflation, the Federal Reserve has raised interest rates by nearly 500 basis points in the past year. This has made borrowing money more expensive for people and companies, which could lead to a slowdown in the economy. Fink's concerns are not unfounded. For example, Signature Bank and Silvergate have both faced problems recently due to the issues mentioned above. Signature Bank, a regional bank in New York, saw its shares fall by nearly 10% in one day after it disclosed that it had exposure to a company involved in cryptocurrency trading. Silvergate, another regional bank in California, also saw its shares fall after it reported lower than expected earnings due to a decline in trading volumes for cryptocurrencies. In addition, the collapse of Silicon Valley Bank has already had a ripple effect in the banking industry. Other banks have started to tighten their lending standards and increase their capital buffers to protect themselves from a similar fate. Overall, Larry Fink's warning about the potential for more bank failures is something that investors and the general public should take seriously. While it is too early to predict the extent of the damage, it is clear that the banking sector is facing several challenges that could lead to more failures in the future. Be sure to like and subscribe for more helpful financial tips and updates. Also, feel free to share this with those you feel that deserve to know this.